Good evening or good morning, good whatever time it is you are listening. I am going to go over the SPY for March 4th, 2025. Now, I'd usually start with like a data set or the earnings. However, we don't really have any data sets coming today. We only have a Fed member speaking pretty much at the end of the day, so that's not going to be too much of a concern. Um, I mainly just am going to go over what happened with SPY today and what we can expect, or I mean, what happened with Spy on Monday, and what we can expect, for the 4th today. So with that said, let's go ahead and get straight into it. Now, for everybody who traded today, it was a pretty insane day. We went from a high of 597 all the way down to 579.90. Pretty absurd. You don't see days like this very often. And it's not even about the percentage really, or even about the dollar amount. It's mostly about how much sold off. I mean, we had Bitcoin drop from, I believe, 94,000 all the way to 92, or all the way to 83,000. We had Nvidia go from all the way from 120 down to 112 at one point. I mean, the dealers really sucked everything out of the market. There's probably trillions of dollars of market cap traded today, or, withdrawn out of equities today. So what we had right here was extremely substantial, and very likely this is the market pricing in the tariffs. It's probably not done, and I'm going to go over why in just a second, but I just kind of wanted to open with that. Is very likely this is the market trying to price in those tariffs. Now that we know they are coming today on the 4th. But anyway, let's go ahead and start with the moving averages and the Bollingers, as always, on the daily time frame, as that will tell us a lot. Now, it's going to be hard to tell with this chart right here because it is the daily chart, and it is hard to tell that we did test the 5 mod today. And by the 5 mod, whenever I say mod, that's a moving average. So the 5 just means the 5-day moving average. Um, this is actually the another day one bottom Bollinger move, just because we did test the 5 mod. So since how do I explain this? We had Friday, which was an extremely strong session. Um, this is Friday's session right here, and I'm gonna hide the Bollingers and the moving averages for a second. But we had this, massive buy, and it took us all the way from, the 584 level all the way up to, that 597. And today's session took us all the way from the 597 all the way down to the 579. So with the moving averages, that's showing that was that 5 mod test in here. So we had the 5 mod test happen. Uh, so very likely today is day one of the new bottom Bollinger move. So just keep that in mind as we go forward. Anyway, so the market closed at 583.77, and the 5 mile is currently at 590.36. So very likely we're going to see the 5 mile pull down probably about to the 587 mark, give or take. It's still going to be above us slightly. Um, but with the bottom Bollinger being on day one, we are likely going to see the lower low. Now, because of where the 5 mile is, and since it's currently at the 590, uh, all the other supports are far above it. So we really don't need to discuss those too much, but we essentially did reject the 5 mod today. We did a test of it, and the test was really between basically Friday and now. We tested that area, it rejected, and it was almost a 10 mod test, but we didn't get up there completely. We rejected the area and pulled all the way down, far under the bottom Bollinger, and now here we are. So the lower Bollinger is at 584.97, which means currently we did close below that level, and that's something I am looking for when sorry, my mouse keeps pulling to the left. That is something I'm looking forward to when I am looking at an upper bottom Bollinger move is if the market price closes at that level, or for the bottom Bollinger I want below, at or below. For the upper Bollinger I want at or above. So we did get at or below, and we did get below by over a dollar. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. But what we should be looking for from this point is essentially looking for the bottom Bollinger day 2 lower low. So very likely we're going to see some sort of structure like this. And we are pulling towards the bottom of the consolidation channel. So that's a really important area. But what I'm starting to look forward to in this area is essentially us starting to form a inverse head and shoulders. And the reason why I'm looking for that is because on the 4-hour chart, we have this really nice inverse cup forming. And while it can go all the way to this 575, however, because it's, the bottom Bollinger day 2, we can start building support above this. And we don't always have to get that lower low. Technically, it could still happen on the first day. So yesterday could have been the lower low of this move before we retest support again. But very likely we are going to come down, finish this large cup out. As you can see, it's very nice. I mean, that's going to give this area right here room to start building a bearish or a bullish structure, and very likely that bullish structure is going to take us back up towards the top. Now, whether it takes us all the way up to the top or if it takes us part of the way there, we'll find out soon. We have this really huge liquidity built right here, and that can end up playing out really well. So very likely we'll start looking in that area, and by the time we do get to this area, we're going to see the 5 mile pulling down because the 5 mile is already at 590. So it's already in this area. It's starting to pull down towards this area. So we can form a handle anywhere in this range, and very likely what we'd be looking for, as always, is some sort of bearish structure to send us down further. And that would give us the inverse cup. Let me just delete these real quick. Something like that. And that's kind of what we should be anticipating for now. But we have to be careful for a couple things. And because we kind of have this expectation to drop down and come back up to this level, we are going to see a cup form here. I'm just going to delete some of these structures real quick so you can better see this. But very likely we are going to have, some form of cup fill in this area, and that's going to throw off many people because it's going to look very bullish, right? A lot of people are going to expect, okay, we're going to then pull down, form a handle in here, and then head back up towards the top. Well, that may not happen because, like I mentioned before, that's going to be right in that area of all this liquidity, and that can build, that head and shoulders reject the breakout and just take us straight down to the bottom of that channel. So that's kind of the expectation I have for now. It's fairly straightforward. I feel like, with that said though, I just wanted this to be a quicker video. So again, the expectation should be we should fill out towards the bottom of that uh, consolidation channel. If we don't, then very likely we're going to start building some support up, build out this cup, and that's going to be the time where it's either the bulls or the bears are going to, decide whether they want to bounce that area or not, because we'll have the cup form, and then we will have the handle very likely start pulling down, and then the breakout has to happen in this area. Either they need to head upward or, continue to push downward to break that channel. Um, yeah, that's basically it for right now. I hope everyone has a safe trading day.